Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model Daily Review for Friday the 5th of the 2nd, 2021. The time is 0500 pretty much GMT. Asian session just coming to a close, European session just firing up, our lunchtime North American session. Right, I've written it up so we can get underway. Yesterday, Thursday the 4th then, we had a negative opposed driver in the euro at minus 211 and 211. And so we had front and back door flows going primarily into the pound at plus 187, next into the dollar at plus 98, and the yen was the negative rock at minus 74. Activity was plus or minus 285. Intra-week then, so this is the maximum point for the week because it's Friday. So we've got a negative opposed driver in the euro again at minus 373. Front and back door flows going mainly into the dollar this time at plus 284. Next the pound at plus 143, and the yen was the negative rock at minus 54 on activity of plus or minus 427. Intraday flows then, before we do some analysis. This is Friday the 5th of the 2nd, open to about 15 minutes ago. So this is basically what's happening in the Asian session. We've got euro on the negative on its own, and we've got yen, pound, dollar, yen, pound, dollar on the positive, plus 16 for the dollar, plus 9 for the pound, plus 5 for the yen, and minus 30 for the euro. So we've got a negative unopposed driver in the euro, we've got a positive rock in the yen, positive mover in the pound, and a positive secondary driver in the dollar, and that was on activity of plus or minus 30. Right, so what's going to knock it about? We've got an FP day today, Friday. And interestingly, if you look at next week, there's not much going on. We've got light day todays Monday and Tuesday right the way through to where is it, Wednesday, when we've got Wednesday the 10th, when we've got German CPI, something to bear in mind. So let's talk about that then. So obviously it was a big day yesterday. we were short the pound. The pound in the morning was doing very nicely, thank you very much. It was softening, it was going off. Then wham, Bank of England comes out. Bailey starts to basically says that negative rates are as an insurance policy, if you like, and the pound gets this massive spike across the full complexes. We're obviously quite heavily involved in shorting the pound, and we got quite busy yesterday and ended up with roughly about 1700 points in the red at the moment on 22 trades. So that gives you an idea of where we are. Right, so now let's do some analysis quickly and then we'll talk about it. Right, so right, yesterday then, euro weakness again, pound strength, dollar strength, but the dollar wasn't the driver. Now over the week though, you've got the euro driving again. So we've had euro weakness, and with the secondary driver on the other side is the dollar. So so you've had euro weakness, dollar strength, bit of pound strength off the back of this secondary flows, and the yen has been holding fairly steady as the rock. So far today we've got the euro being the unopposed negative driver. And as you know, unopposed negative drivers are one of two things. They're floors in this case, or the start of a big ramp down in the euro. We've certainly had a big ramp down in the euro already, so it's unlikely to be the start of a further ramp down. It's likely to be putting the air brakes on the euro. We've been saying the euro complex is at a floor, and we still believe it. It's just we had a massive overshoot due to circumstances. Anyway, let's get organised. So, right, so if you look at the wider market as well, we've got gold coming right off because it just can't resist this surging dollar. So gold's not happy. What else have we got? We've got equities have been really pumped. The Dow is lagging, the tech is mid, and the S&P is outperforming, which is interesting. What else have we got? We've got copper. Copper doesn't like this, or doesn't buy into this big pump in equities. So therefore, be wary of that. Copper's sort of looking like this from a peak. So copper's not buying into the global growth story. And oil's really pumped. Oil has had the benefit of all sorts of things during the OPEC meetings, etc. So oil's partially buying in, but that's for different reasons. Right. So what have we got? What have we had? We've had massive dollar strength, and de facto, which is my word of the day, weakness in the euro. Then we've got the pound, our favourite friend at the moment, and the yen. Right, now looking at the flows then, bearing in mind that it's non-farm pay, if the market generally starts to really enjoy itself, and not that we've been, but if the market generally starts to feel people have been bandwagon jumping on the cart, then at some stage you've got to remember that these are just paper profits, as our losses are just paper losses at the moment. We apart from where we swapped out, but most people don't swap out, they just hang on. So the market is holding on to some very nice profits, or some people in the market holding on to nice profits, and at some stage they're going to ditch these, and in order to ditch them they'll have to sell. So that's just something to bear in mind. Right, the dollar then. The dollar was also talked up by Esther George, president of the Fed in Kansas. She was saying how great everything was. Been reading the script. We just had a new president, Biden, etc. Draw your own conclusions. Anyway, so the dollars had very strong data, and interesting, the euro complex has had very strong data. We'll be doing a data cycle video for this week tomorrow, and the weekly roundup, so watch out for that. That sort of ties in very nicely. Now the pound as ever is punching way above its weight. If it had been falling off the back of the fact that we were going to do negative rates, then you could have understood this pump in the pound when they said they were going to postpone negative rates, but it wasn't. It was the pound was falling due to a positional situation in terms of flows and complex positioning, as I said, and the overall situation with the pound generally, deteriorating data cycle, etc. So we still say the pound in a modelling sense is at the top. But obviously the market is ignoring that at the moment, and the yen, we say, is at a floor, and we're getting lots of signs that the yen doesn't want to go down anymore. Okay, yesterday, for example, the pound yen. When you get an equity pump, you'd normally get the yen complex coming down, and then we had this pound situation. So the pound yen should have been really stretching on the up, but it wasn't. something to bear in mind. We added to our positions there, so we're running, I'll show you what we're running now. What we're running, we're running pound CAD short times 2, euro pound long times 5, pound dollar short times 2, pound yen short times 2, so that's 2, 4, 9, 11 on 2 accounts, 22 trades. Okay, so we're 22 trades in that situation, in that scenario. This is what we're sticking with belligerently, and that's what we believe is the correct stance from the modelling. We are going to stick with it. We just have to be toughing it out at the moment, and that's just the way it is. We're not going to be pushed out of these trades. We are operating on an unemotional basis as such, and we're just looking at the situation from a modelling standpoint. Right, so just to sum up then, NFP, everybody's positioning for a really strong NFP because of the ADP report, etc., and all this noise. We may get it, and we may get a little bit of further deterioration in these positions, but ultimately that's what we're doing, and that's what we say is going to happen. So we're going to say the pound's going to come off, the euro is going to come up, the dollar's probably going to go neutral, and the yen's certainly going to come up. So hope that was useful. See you tomorrow for the weekly review and the market data cycle review for the week. Thank you very much.